The amount of money that people spend on their groceries, their energy bills, and their houses are continuously increasing, little by little and sometimes in big strides. They generally increase faster than wages, and so, on a long timeline, we see the purchasing power of our currencies declining. It hasn't been a mystery as to why this is happening, since we already know that the central banks have made this their entire agenda. The only question is, what will people do? You came here for the truth, so let me unveil that for you. Today we're going to talk about debt. I want to have our focus specifically on real estate or housing in this regard. So let's begin by taking a look at Canada. This chart shows the debt to income ratios in Canada, and you see from coast to coast the differences, but I want to focus on a few, and obviously Toronto and Vancouver being where we're primarily targeting. This is where a large percentage of the population lives, and it is very important to track the progress of what we can see regularly occurring in these big cities, and that is expenses increasing, and in this case debt to income ratio getting worse and worse and worse. So these numbers on the yellow line are from the second quarter of 2018, and each line is going back a year, and you can see that in general this has been increasing. You look at the average for Canada, and over the past few years it has increased. Looking at Toronto specifically, we can see it's getting worse here. There is no doubt in my mind, exceeding 200% debt to income ratio. In Vancouver, it's close to 250%. This is absolute madness. Nobody can afford this. It is ridiculous. You know, I've seen these numbers before on the national level, but never seen it broken down by city, and this gives me an even better perspective on what's happening. Looking at these two cities, Toronto and Vancouver, obviously we've got a very big problem here. People are so heavily in debt, but they believe because it's somehow tied to real estate that it's okay. And that couldn't be further from the truth. That is foolish. And while maybe having excessive debt in real estate is better than having debt on a credit card, for example, it doesn't necessarily make it okay. That's what people don't realize. You probably borrowed at a rate that was relatively acceptable, but trying to convince yourself that taking on mass quantities of debt that takes decades to pay back is okay really is a big mistake. We'll look further into this here, and I think it's important to track how much people are spending on a regular basis. Mortgage debt service ratios of households. Now you can see the mortgage interest ratio in blue and the mortgage principal ratio, and this has actually become more positive over the years. But the problem here is that yes, as interest rates have fallen, people have been able to pay more principal versus their interest. But what isn't discussed here is the fact that now the size of the mortgages are gigantic, and they are left with this huge pile of debt. By the way, this chart goes from 1990 up until present, and although they're suggesting something that I can't refute, I agree, this is the facts, but obviously we've got a big problem because people are taking mortgages that are $500,000, $700,000, $1 million and beyond, and there's no way that they're going to ever pay it back on time, and I'll tell you why in just a second. Debt to income by debt product. You're looking here on the bottom, you'll see the legend, the mortgage, home equity line of credit, credit card, auto, line of credit, other, installment, and revolving, all making up the total quantity here. Vancouver, you can see this, almost 250%, and you're seeing Toronto exceeding 200% as well. And basically, on this chart, it breaks it down even further, and that's why I really like this one, because you get to see how much they're spending on that mortgage specifically, how much is being spent with their home equity line of credit, their credit cards, and so on. Now, obviously, as I've mentioned, the mortgage is a big chunk of their debt, no matter where you look. It could be in St. John's, Newfoundland, it could be in Montreal, but looking at it in general, it happens to be the biggest percentage. But home equity line of credit is making up a large percentage of the amount of debt that people have today, and I believe this is a problem because they don't know what they're doing, and of course they will be burned by it at some point. In general, there is too much debt and there is no possible way to ever pay it off, especially in the event that we see deflation in assets. We technically have seen a slowdown in real estate when you look at it in Canada, but also look at it in the United States. You can see that in Europe. You can see it all around the world. Australia, significant drop. And so we see that occurring today. We also have the stock market, which has been performing very poorly from October up until the end of the year. And so this can happen. It can happen without people expecting it, and they are always too far into debt at that point. It's not as if they see the problems coming, they start to scale back on their purchases, they start to pay down their debt. It doesn't work like that. It's always a little too late. So today I wanted to get further into this issue. I wanted to look at the US, I wanted to look at the population problems that we have, and I wanted to cover the UK as well. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel, so I do appreciate that very much. And last but not least, if you want the financial education you were not taught in school, these two books have everything you need. From the foundation and the asset classes and making money and tax incentives, I cover it all. There are so many people who have read these books and found them to be, as I always say, more informative than my videos, and this is just what I had been able to piece together over the years, and I know that they would be beneficial to you. If you want to check them out, just click on the link in the description. It'll take you over to Amazon. If you want the audiobook, that's available at themoneygps.com.